Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be talking about a company that we've mentioned on the channel a few times before. We're going to be doing a deep dive analysis on their business model and talking about some recent earnings. Now the company name is Very Good Food Company. This is a position that I currently hold in a number of my portfolios, and I'm very excited about their business prospects over the next couple of years. They've got huge growth in their plans, and we're going to dissect that in this video. Now, before we get into it, you guys, please take a second to smash the like button. It really does help out both myself and the channel. In addition, if you're not currently subscribed to the channel itself, McNallie Money, feel free to do so. And let me know in the comment section below if you're currently holding shares of Very Good Food Company, what you think about their growth prospects moving forward, and your thoughts about their recent earnings report. Now without further ado, you guys, let's get into today's video. Okay guys, so that's right. Today we're going to be giving an update on the Very Good Food Company. Now it's been a while since we did a real deep dive on this stock on the channel. I had it in my top 6 picks for the month of August, but we haven't really talked about their business model in depth for a couple of months, and there's been a ton of evolution and changes within this company. Now, in addition to that, they just came out with earnings last week on Wednesday the 18th, so I wanted to talk about those. There's really 2 schools of thought here, you guys, in terms of the Very Good Food Company. The bullish camp is really looking at their growth trajectory, some of their production goals over the next couple of years. The bearish camp is looking at current revenue compared to market cap. So we're going to talk about both sides of the equation in this video. I personally have added to the Very Good Food Company just recently here. I actually picked up 500 more shares of Very on the 6th of August at an average of $3.10. So that brings me to a current holding of 1,000 shares with an average cost of $4.48 with a current market value of $2,850. So I am down on the position right now. I would say this is kind of a mid-size holding in my account, but this is a company that I plan to continue to add to because I'm in this for the long run, you guys, and I think Very Good Food Company is in an extremely promising industry, and they've got a lot of ways that they've really differentiated themselves from some of the competitors or the big boys in this space like Impossible or Beyond Meat. Now in terms of share price here, this is as of close on Friday, August 20th. Very Good Food Company was down 2 cents a share on the day, so just under 1%. And if you look at a 1-year chart on Very Good Food, it really is quite dismal here, you guys. So it's been downtrending continually throughout the entire year. It's now trading for about half of what it was back in March of 2021. And if you look at some of the online forums in regards to Very Good Food Company, public opinion is very mixed in terms of where we're going to bottom out here. So some people think we're hitting bottom right now. Some people are saying in the dollar range, the 50-cent range. I, for one, definitely do not think we will hit 50 cents per share in Very Good Food Company. But who knows? Time will tell here, you guys. I think we're getting very close to bottom, around $2.50, $2.75 type of range. Now, in terms of market cap here, you can see just under $300 million Canadian. Obviously, it trades on the TSX Venture under the ticker symbol VERY and on the Pinks in the US under the ticker symbol VRYYF. So first thing I wanted to talk about here, the most recent news, as mentioned, came out a couple of days ago, Wednesday of last week. This is their Q2 results. Then we're going to transition and get into their updated investor presentation and really do a deep dive on their current business model. But there's definitely a couple numbers in here I wanted to talk about. So first up is their year-to-date revenue. So as of the first half of 2021, revenue is up 280% over F20, and we're currently sitting at 5.4 million. So based on a full year run rate here, assuming same production quotas that we're meeting in the first half of the year, we're looking in the range of about $10 to $12 million in F21 revenue holistically. Now, number of units sold is also up in the triple digits, 226% year-over-year gain, so that's great to see. E-commerce revenue, which right now represents the lion's share of overall revenue for this company, was up 355% year-over-year and landed at 3.4 million for the first 6 months of 2021. And obviously, if e-commerce revenue is up, you'd expect e-commerce orders to be up, and you can see they are quite healthy, just over 47,000 orders completed compared to 40,000 in 2020. So if you're looking at the percentage gains year over year here, you guys, triple digit growth is phenomenal for any company, and that's exactly what the bulls in Very Good Food Company are really focused on here. Now the bears are looking at the actual revenue of $5 million in the first half of the year, 10 to 12 for the entire full year guidance, and they're thinking, hey, market cap of $300 million, $10 million in revenue, we're trading about 30 times sales here, you guys, which definitely does seem a little steep. However, we're going to talk about some of their increasing production coming up here in the next couple of seconds, and I think that could start to justify this rich valuation for two main reasons. Number one, they're ramping up production exponentially here at Very Good Food Company, both in Canada and the United States. And secondly, they're ramping up their points of distribution exponentially as well. So they're in a number of major retailers now. They're expanding their SKU count, and they're aggressively growing out their business model, very similar to what we see with Tattooed Chef right now. Now, if you scroll down in this article, there's two other points I wanted to touch on. Number one is their wholesale revenue, which was up 168% to $455,000 in Q2 of this year, compared to just under $170,000 in Q2 of last year. So that's a huge increase year over year. And if we're talking quarter over quarter here, you guys, they're up 32% from where they landed in Q1 of this year, coming in just under $346,000 in wholesale revenue. Now we're going to talk about why this is important later in the investor presentation, but the company is really focused on shifting the majority of their activity to wholesale, and that's why I wanted to bring your attention to these percentage gains. Now the other thing that was really nice to see here, adjusted gross margin was actually up 6 percentage points compared to the first half of last year and landed at 38% of revenue. So this is very healthy compared to a lot of other companies in the food and beverage space. And it's great to see that that's improved year over year. Now, final point here, guys, on the bearish side of things, they did report a loss of $5.7 million in Q2 of 2021. So the loss has definitely widened in a big way from Q2 of 2020. And if we compare it to Q1 of this year, it's relatively flat, about a $300,000 change from the loss of $5.4 million we saw in Q1 of 2021. However, this is a direct reflection of the amount of money they're spending on marketing, advertising, and building out their overall business operation. So I personally am not overly worried about this based on the current business environment. However, it definitely is something to keep an eye on because as we all know, companies cannot put up a loss forever. And at some point in time, they need to convert the growth into profit. Now on the previous slide, I talked about the exponential growth in terms of production. So this article is actually from the EBeyond portfolio. So this is a group of companies or essentially an ETF that you can buy into that really tracks plant-based protein. We're going to look at their website in a second here, but this article gives a really good update on the production expansion at Very Good Food Company. So for those of you who are unfamiliar with Very, there's two main areas they're really trying to grow production right now. The first is located in Canada here in Vancouver. It's called their Rupert facility. Line 1 is now up and running, and it's currently producing 4 times what they were on a daily production volume in the Victoria facility. So Victoria was their first location. It was relatively small. They then expanded to Vancouver, which is now producing 4 times what they were in Victoria. And they're also building out a facility in California that's going to produce exponentially more than they do in the Vancouver location. Now, line 1 at the Rupert facility was commissioned in April of this year. It's currently producing about 13,000 pounds of product per day, and they're looking to ramp that up to about 4.5 times their current run rate, or roughly 60,000 pounds of product per day by Q1 of 2022. So right there, you guys, you can see that exponential growth. They've already increased their production 4x from what they were doing in Victoria. Now they're looking to increase that about 4.5 to 5x again in their Vancouver location. Now, in addition to the overall production increase, they're also looking to diversify the number of SKUs that they produce at this location. So they're working on commissioning what they call line 2. This is going to be up and running by the last quarter of this year. And this is really going to focus on the gluten-free, soy-free Butcher's Select line. And we're going to look at their product portfolio a little bit later in the video, but this is really going to focus on that higher end select line of products that Very Good Food Company is extremely excited about. Now, in addition to their operations here in Canada, Very Good Food Company is extremely excited about market opportunities south of the border in the United States. So a couple of things to call out here. Number one, their Patterson production facility is located in California, so very strategically located, as California represents the biggest market in all of the United States. And as we all know, the demographic on the west coast of the United States, or California specifically, is very open-minded to products like this, plant-based proteins, eco-friendly alternatives, ESG type of companies. So I think this is a great location for them to really enter the US. In addition to that, the Patterson production facility is located on the same property as one of their main distribution partners. So they have a lot of synergies there in terms of getting these products to market in a very efficient way. Now they've just started production at this facility. They don't have any of the big lines up and running. They have a commercial grade kitchen on site. They're focused on producing the taco stuffer first and foremost because this is their most in-demand SKU currently on the market. Now they're looking to get their first major production line, or line 1, up and running by the second quarter of next year. And that line alone is expected to produce an average of 27 million pounds of product per year when fully operational. So that one line will produce more than the entire Rupert facility and Victoria combined. And that's exactly the essence of this last quote here. The expanded production capacity in major markets along the West Coast enables Very Good to further expand its product listings and SKUs, which will help drive sales to its e-commerce and retail channels. So this is the first piece of the equation that I really need to see as an investor in this company, is can they meet demand and can they get their production ramped up to levels that are going to lead to meaningful revenue growth for this company. And in my personal opinion, the answer to that is yes, on both fronts, whether it's in Canada or the US here. Now the other piece of the equation is once they have this production capacity, they're making all these products, are they going to be able to move them and actually sell them? And that's what we're going to talk about later in the presentation here when we look at their expanded distribution network, retail strategy, and at-home delivery service. Now we're going off on a little bit of a tangent here, but I did want to throw this into the video because I thought it was pretty interesting. That last article was from EBeyond, and this is really a company that's focused on giving investors exposure to up-and-coming ESG type of companies, specifically in the plant-based protein space. Now why I thought this was so interesting as I went to this website is the two companies that are listed first here, the Very Good Food Company and Good Natured Products, have both been featured on my channel before and are both current holdings of mine. Now if you scroll down, in addition to the public companies, there's also a portfolio of private companies that you get exposure to here. So Just Eat, Turtle Tree Labs, Nabati Foods. There's actually 8 private companies in total. So I thought that was interesting if you're looking for a way to get some exposure to this space in a little bit more diversified fashion or manner. So shifting gears back to the Very Good Food Company, now we're going to get into their investor presentation. This has been updated quite a bit since the last time we went through this a few months ago. So I wanted to run through some of the new slides and new content that I think really paints the picture for the Very Good Food Company moving forward. So first off here, the mission statement. What is the Very Good Food Company all about? They're trying to get millions of people to really rethink their diet and food choices while helping these people, what they've coined, do the world a world of good. By offering plant-based food options so delicious and nutritious, we're helping this kind of diet become the norm. With the state of human health under the microscope, demand for our products is accelerating rapidly. So the Very Good Food Company, along with competitors in this space, are really trying to get plant-based protein front and center on people's dinner tables, which in turn is helping the environment and the planet in a number of ways, including reduction in livestock farming, which in turn cuts down on greenhouse gas emissions, reduce stress on the fresh water system, reduce stress on the healthcare system, and overall better relationship between humans and the natural environment. So some of the operational highlights from 2021, we're going to talk about their future growth plans here in a couple of minutes, but I really wanted to give a State of the Union here in terms of where Very Good Food Company is currently at. So right now they have 20 different SKUs in the market. They've fulfilled over 47,000 e-commerce orders year to date, which we mentioned in that earnings review. They've increased production capacity from 8,100 pounds per week to 89,000 pounds per week since last year. So that really speaks to their focus on production capacity. They've got 4 new logistic partnerships. Products are now available in 10 provinces, 3 territories, so right across Canada, and 50 states in the US. 2,100 monthly e-commerce subscribers, I've actually participated in e-commerce sales of this company a number of times. My wife and I have ordered, I think, 3 or 4 of their barbecue boxes right now. We absolutely love the products. And the final point here, which is a big one for me, nearly 2,900 points of distribution across North America. So as you can see, the numbers are starting to become quite meaningful, and they are really beginning to establish their footprint across North America here. Now this slide really talks about Very Good Food Company's value proposition compared to some of their competitors. And as most of you are probably aware, there's a number of companies in this space right now. Tattooed Chef is one, not necessarily just in plant-based protein, but in the food space. We've got Beyond Meat, we've got Impossible, and a host of other smaller companies that are really trying to take their share of this emerging market. So Very Good Food calls out 4 main reasons why they feel like their products are a cut above the competition. So number 1, they've got a clean deck of ingredients. Now if you look at the ingredients in a lot of these other competitors' products, although there's no meat, there really is a lot of stuff in there that's not great for your body, and overall, they're not the most healthy products. So Very Good Food Company has really ensured that taste goes along with nutrition, and they're really trying to produce clean, healthy, plant-based alternatives to really address the demand or society's shift away from animal-based foods. Second point here, and this is a big one for me as an investor in this company, they're extremely innovative. They've got a deep pipeline of R&D projects, and they've got a number of offerings that just aren't available with some of the competitors. So a few that come to mind for me are their ribs, their taco stuffers, their pulled pork, their steaks. These are products that I haven't seen with a lot of the big mainstream competition. Now the third point, very closely tied to the second, is their speed of entry. So once they get these new products out of their test kitchens, they're extremely efficient in bringing these products to market and to the public. And that's really what we see in a lot of industries, is the smaller competitors are a lot more agile and able to address changing consumer demand in real time compared to some of the bigger, more well-established players. And the fourth point here is really focused on driving growth or expanding their reach within the company. So they're focused on growing brand awareness and consumer engagement. They're expanding across North America, which we just talked about. They're moving into the United Kingdom and plans to expand into Greater Europe and Asia through new distribution partnerships and select acquisitions of existing companies. So Very Good Food Company is really eyeing global or international expansion opportunities rather than just here in North America, which is where they're currently focused over the last couple of quarters. And this slide here really illustrates what I was talking about in point 2 in terms of product innovation. So this is a look at what they call their original line of products. Now we're going to look at some of their other offerings, including the Select lineup next up here. But as you can see, guys, they've got the ribs here, they've got bacon, they've got what they call deli fowl, they've got roast beef, steak, stuffed chicken breast, taco stuffers, pulled pork. These are a lot of products that I really haven't seen with any of the other companies in this space. Now, most of these companies offer obviously burgers, hot dogs, and their version of plant-based smokies. So Very Good Food Company also checks off those boxes. But for me personally, whether it's animal-based protein or plant-based protein, I get sick of the same meal over and over. So I really like the variety of products that Very Good Food Company currently offers. Now, in addition to their original lineup, they've also got 2 Wildcards, we'll call it. So they just purchased a nut-based cheese company. They've since rebranded it to the Very Good Cheese Co. We've tried a number of these products as well. Extremely good, exact same texture as traditional cheese. So that's a great addition to their overall portfolio. We're going to look at a couple numbers in a few slides here that talks about the total addressable market for alternate dairy in the world as well. And this cheese division really gives Very Good Butchers exposure into that space. Now they've also got their Butchers Select line of products, which includes meatballs, burgers, breakfast sausages, bratwursts, and Cajun smokies. So again, bringing more diversity to people's diets and giving them options in the grocery store. So now that we've looked at the chart, we've talked about their earnings report, we've discussed their product lineup and vision, I wanted to get into some of the numbers here. Now, a couple of things that are very important on this slide. We talked about their shift towards wholesale. Now you can see on the left here, e-commerce sales, they're able to average about $14 per pound of product. Wholesale is substantially less, it's about $7 per product, but they're able to push tremendously more volume. So that's one thing to be very aware of. Now we're going to do a couple calculations towards the end of the video, but keep these numbers in mind. So $14 per pound e-commerce, $7 per pound wholesale. Now the chart here really shows their annualized production capacity over the next couple of fiscal years. So Q2 is what they just reported. About 20 million pounds of annual production capacity is their current bandwidth. They're really not expecting a lot of growth in Q3. Very limited introduction from the Patterson facility, but it's really going to be Q4 when they get that second line at their Rupert or Vancouver facility up and running, where they're really going to start to hit the gas. So by Q4 of this year, production capacity is going to double up to about 40 million pounds per year. 2022 is when we really see the Rupert facility kick in, not necessarily in full capacity, but as you can see, even while they ramp, the Patterson facility in the US is going to take over 50% of overall production capacity, and they're expecting to have an annual production capacity of about 90 million pounds of product by 2022. Now 2023, when the Patterson facility is fully up and running at maximum capacity, we're looking at nearly 135 million pounds per year of production capacity, and that's what they call out front and center here on this slide. So even if you assume that every single pound of product is sold at wholesale pricing, and you take 135.5 million, you multiply that by $7 per pound, you get a total of $948.5 million in terms of top line revenue going into 2024. So now when you look at their market cap of about $300 million, you can see why the bulls are so excited about this company despite current year earnings and revenue. Now I mentioned there were really two pieces of the equation that I need to see as an investor. So number one is production capability, which we've talked about a number of times in this presentation. The second part is once you actually have all that product, where do you sell it and how do you distribute it to the end customer? So retail is really what's going to drive their wholesale transition at Very Good Food Company. So they've actually spent a ton of time and energy this year really building out a lot of these relationships. As you can see, they're now available in 17 select grocery retailers or banners. Some of the main ones here in Canada, IGA, Safeway, Save on Foods, which is where I shop. So you're starting to see these products in some of the more select retailers. Obviously in the States, Whole Foods, Thrifties, they're some of the bigger players. And Very Good Food Company, although they have nearly 3,000 distribution points currently available, they're targeting nearly 15,000 by the end of this fiscal year. So if that's not exponential growth, I don't know what is. And that's exactly what's driving those aggressive spends in marketing and promotion dollars that we saw in their Q2 earnings report. Now, in addition to their retail distribution strategy, they've also signed a couple of partnerships just this year in the food service space. So the first was with Copper Branch, which is the world's largest plant-based quick service restaurant chain. The second one is with Fresh Prep, and this is a Vancouver-based meal kit delivery service company. So very similar to a HelloFresh or something like that. It's subscription-based where people can actually sign up and they have meals or products delivered to their home that they can cook at their leisure. And a couple of stats they call out here. So in the US, wholesale food service sales grew 37% in the plant-based meat space last year, and they're expecting meal kit delivery to grow at a compound annual growth rate of about 13% through 2028. So again, this won't represent a big percentage of their overall revenue, but it is cool that they're getting into this space and they're really diversifying the way consumers can obtain their products. Now this slide really focuses on TAM, or total addressable market. So they're estimating the value of the entire plant-based market to reach $74 billion by 2027. Now about 18 billion of that is really going to be meat substitutes. That's expected to grow at about 15.1% from now until 2027. And what was actually surprising to me is the global alternative dairy market is actually projected to be just under 45 billion, so substantially bigger than the global meat substitute market, with a compound annual growth rate of just over 11%. And this is why I think it's so cool that they entered the plant-based cheese space, because it really gives them exposure and a foot in the door to make a meaningful impact in the dairy alternative market alongside the plant-based protein. So huge total addressable market here, you guys, and this is really why we're seeing so many companies start to enter the plant-based food space here in North America. So as we start to close things out here, there's a couple more slides I wanted to really talk about. Now the bears on the forums are really saying, okay, great, Very Good Food Company has all this production capacity, they've got all these new retail distribution agreements, but is it really possible to grow revenue from $10, $12 million to $50, $100 million within 1 to 2 fiscal years and up close to $1 billion within the next 3 to 4 fiscal years. And I wanted to include this because this slide really shows Very Good Food Company's ability to handle exponential growth very effectively. So in terms of quarter over quarter growth, you can see Q4 of 2020 came in at 1.8 million in terms of revenue. Q1 came in at 2.6. Now we have seen that kind of plateau in the Q2 numbers that we saw, but the reason there is really their limited production. They haven't had any new lines or facilities come online, so they're really maxed out in terms of overall production capacity, which really translates into revenue. The more interesting graph on this page for me was on the right here, which shows 2019 revenue compared to 2020, and this is when they really started to see some of those production changes. So they were actually able to grow revenue 4.6 times from 2019 to 2020. And this gives me confidence as an investor that this company can handle that type of growth. They've got the distribution relationships in place, and they can get these products to market and actually sell them when they really start to see production volumes increase. So let's say even on the conservative side, they do $10 million of revenue this year. They 4x next year, they're up to 40 million. 4x again into 2023, they're up to 160 million. 4x again into 2024, and then they're up in the 600-700 million type of top line revenue range. And that's assuming the same growth rate we saw from 2019 to 2020 without that massive Patterson facility online. Now the last slide before we get into our summary really talks about the revenue by channel. Now I told you to keep in mind that e-commerce rate of $14 per pound and that wholesale rate of $7 per pound we saw a couple of slides ago. Now current state, about 81% of Very Good Food Company's revenue comes from e-commerce. However, as they start to really build out their retail relationships and shift towards that wholesale product mix, they're looking to get about 80% revenue wholesale and only 19% from e-commerce. Now again, the bears are going to say, well, margins and overall sales price is a lot better with e-commerce, so why wouldn't you want to focus there? The problem is you can only push so much volume through e-commerce, and there's a lot of back-end expenses related to packaging, shipping, and delivering these products. So by transitioning to wholesale, yes, you're earning only half of what you would in terms of per pound sale price, but you're able to sell exponentially more pounds of product. So I ran a couple numbers here, you guys. If we take the 135.5 million pound production capacity, which they're expecting to be up and running by 2024, and we multiply that out by these percentages and these sale prices per pound, it works out as follows. So 20% of 135.5 million pounds is roughly 27 million pounds of product that they're selling at $14 a pound. So that's about $378 million of revenue. The remaining 80%, which equates to about 108 million pounds of the total 135, multiplied by $7 sale price per pound, works out to 756 million. So assuming they're able to hit that production goal and they get this product mix in terms of revenue from wholesale versus e-commerce, my calculations are showing annual revenue for 2024 in the neighborhood of $1.1 billion. So again, when we look back to their market cap of 300 million, yes, their valuation is a little bit rich at this point in time, but as a long-term investor, I'm really buying into Very Good Food Company because I see long-term growth and long-term opportunity. So I'm not necessarily worried if I'm picking shares up at $2.50, $3, $3.50, because I think this is going to be a $10, $20, $30 stock within the next decade. And I'm not going to get overly worried whether I get in at the absolute bottom, as long as I'm part of this story overall. So to close things out here, you guys, I wanted to bring this slide up. It shows their overall priorities for 2021 broken out by production goals, brand and product goals, strategic acquisitions, expansion, and overall sustainability. As you can see, the team at Very Good Food Company has been extremely busy this year. They've already completed a number of their objectives. There still are a couple big ones left outstanding, specifically acquiring brands to support portfolio expansion. So we saw the acquisition of the Cultured Nut, which has been rebranded as Very Good Cheese Co. I expect to see more in this space, specifically in alternative dairy. We've talked in detail about the launch of Line 2 at the Rupert facility and production coming on in California at the Patterson facility. They're also looking to open up an additional flagship retail butcher shop in Vancouver, which again I think is a really cool and unique way to interact with the public. And then a number of outstanding goals really focused on sustainability. Obviously, these are great. You guys know I love to invest in ESG type of companies. However, these really are nice to have. So I'm happy to see that management has really started to focus on some of the main deliverables this year. And I'm okay personally if they deliver on these ones at a later date. So overall, you guys, I'm super excited about Very Good Food Company. Q2 numbers weren't anything groundbreaking, but honestly, I'm not investing in this company for current revenue and current production. I'm looking years out, and I think the team at Very Good Food is really onto something here. They've got a very diverse product lineup. They're aggressively building out their SKU count. They've signed a number of new retail partnerships, massive exponential distribution growth, and they're expanding production in a way that I really haven't seen with a lot of other companies in this space. So for those reasons, you guys, I'm happy to keep adding shares to my position of Very Good Food. This is exactly why I included them in my top 6 for August. Hopefully this video gives you guys some more insight to the overall business model. As always, feel free to leave a comment in the section below on what you think of Very Good Food, if you're currently holding shares, and what your opinion is on some of the topics we covered in this video. If you haven't already, please make sure you smash the like button, you guys. It helps me and the channel out in a huge way. If you're not currently subscribed to the channel itself, McNallie Money, feel free to do so. And take a look in the video description below. There's a link to Questrade. This is the platform that I currently use here in Canada to trade stocks and options. If you've been sitting on the sideline, you're thinking about getting involved with investing, this is your first step. If you click on the link, you'll get a $50 trade commission credit. So you get your first couple of trades actually on the house, which always helps. And because I actually use the platform, I can help answer any questions or concerns you have as you start to set up your account. That's it for today's video, you guys. Thanks so much for watching and have a great rest of your day.